I'm recording this video to show you how you can trade DERIV, the volatility indices, using the market structure at the SMC. You don't need a bot to trade this volatility for DERIV. You can also use the SMC, any other strategy it applies also to them. So for instance, this is a chart on volatility 75.1s. So in terms of the structure, you can see that the market was selling, then the market was making lower lows and lower highs. Unfortunately, the lower high was taken out to signify the trade direction. So how do you trade DERIV using SMC? It's very simple. In this case, you have the last break of structure here. So this is the last break of structure. So let me write it here. This is the last BOS. That is the BOS there. Okay, so having that, in this case, it means that you have your protected high as yes, that is a protected high, and you have your weak low below there. So what you are expecting, this one being the impasse move, you are expecting for a retracement, then a continuation to the downside, because for a break of structure it always signifies the trade continuation. But that one did not happen. Instead, this protected low, or this strong high was taken out. So in this case, it means that the market has already changed the direction. So in this case, when the market gives us the change of character, it simply means that the market has changed its direction. So in this case, what are you expecting? Since we have this lower high being taken out, remember this was our previous lower high, this was our lower low. So now the market, we were expecting it to give a pullback or a retracement, but it did not give that. What it did, it gave us the reversal sign, and the reversal sign is the choke. So it means that the buyers have momentum in this case. So as that, what we are expecting now in this case, having this change of character, we always expect for a retracement. So now you will have your new market range. In this case, you'll have this lower high, and you'll have this now higher high. So in this case, it means that the market will try to do what? The market will try to to retrace, because now this from here will be our impasse move. We will expect for a retracement, then a continuation, and that a continuation should take out this possible break of structure above there. So that is what we are expecting in this case. So after that, after the change of character, the market had to retrace. So in this case, you can see there was a lot of liquidity along here. Remember, if you don't spot liquidity in the market, you are most likely to be what? You are most likely to be liquidity. So this was a trade line liquidity that was there. And then before that, below that liquidity, there was what? There was a point of interest here. Okay, so you can see after the market collected this liquidity, there was below an order block. And how do you know an order block is good? An order block can be powerful when the market has already taken out the liquidity, or also the inducement is also the part of liquidity. Then after that, you can see this break of this order block, or this demand zone, has negotiated or has led to this change of character. So these are two factors that are making this order block to be more powerful. Then you can see after that, the market had already mitigated this zone. Alright, so what do we mean? What do we expect? We are expecting now a continuation, since we had the reversal sign. So in this case, I'll name this zone as our possible break of structure. Okay, I'll name that one as our possible break of structure, because what I'm expecting, since this was a retracement, I'm expecting now an impassive move to happen, because as you know, market move in two phases, the impasse phase and the pullback phase. So the first one was our impasse, this was our pullback that mitigated the point of interest. Then after that is when we are expecting now buys to happen. Then the market has already mitigated this one to give us what? An expansion move or the impulsive move. So on a long-term perspective, we are expecting to have a possible break of structure here to get another high. Then after break of structure, we will again expect a swing retracement, then a continuation. Or if we will not get a swing retracement, we may get again a swing impasse to signify that the entire structure has already done what? The entire structure has already shifted. So after that, you can see after the mitigation of this order block, then the market has already started what? The market has already started buying momentum. So in this case, what do you expect? Because we expect again when the market mitigate this zone. So it's good to remember that when you are mapping a market structure, you always have two structures. You have the external structure and the internal structure. So when the market was coming to mitigate this zone, was on a bearish move, and this bearish move was making its what? It was remember, when the move is bearish, it always makes, or it always form a series of lower lows and lower highs. So in this case, you can see here that the market formed what? The market formed an internal break of structure. So this is an IBOS. Okay, so to signify that the trade is still bearish internally, but remember the external structure of the swing structure is what? Is bullish. So that was our internal IBOS. So after that, after this internal IBOS there that was formed in the internal structure, this was our internal IBOS like that. Okay, so you can see again the market mitigated this zone. So after the mitigation, because we expected that this retracement to end here, and in this case the order block was also on a good buying zone because it was very low, the price was very low, or it was at a discounted price. Then after that mitigation, the market did not give us another internal break of structure. What it did, it gave us our internal change of character. Market gave us our internal choke. So remember, now we have the internal choke that has happened. So it means that the internal structure and the external structure are most likely, or now they are showing the sign of moving in the same direction, or there is realignment of the structure. So in this case, we get another, we even using the same time frame without even moving to a lower time frame, the market has already signified what? Realignment of the structure in this case. And remember, our long-term target is what? Is to take out this weak high or this possible break of structure. So after this break of structure, what do you need? You can even suggest you can go to the lower time frame now, so that you need to have a setup. So even the lower time frame itself, you can see how the market has been behaving. Okay, so after the mitigation, remember this was the mitigation on a higher time frame, then there was our internal change of character. After the change of character, there was a retracement, and then retracement mitigated what? Mitigated this point of interest there. Okay, to get another internal break of structure, it's always good to understand between the internal structure and the external structure. So this is also our internal what? Our IBOS, our internal break of structure there. All right, so having that, what are we expecting now? Because for every break of structure, or for after every change of character, we always expect what? A retracement. That's when the market had already now done what? The market had already now was on a selling momentum. Okay, so because internally we have these two zones, we have this high and we have this low here. Okay, so having those 2 points of interest, or having now this our internal market range, we were expecting a retracement, then a continuation. So in this case, the market has reacted to what? has reacted to this zone there. So what are we expecting? Since this was our internal protected door, we are expecting the market to give us this another internal possible break of structure. It's very simple. It is very simple. So we are expecting the market to do what? We are expecting the market to give us this possible what? Sorry, I think possible break of internal structure. And remember, our goal or our target is to take out this swing high. So this is how the structure is looking like. Our target is to get out this main. So if we can get a buy, we will have this break of structure. But remember, our aim is to take out this possible break of structure. So what the market is doing, it is just trying to form internal structure. And remember, these internal structures, they are the ones that are giving us what? The one that's giving us the structures, because we usually, for us, most of the traders are the day traders. You cannot rely on the daily time frame. That's why we need to rely also on this internal what? On this internal structure, so that we can get a move all to from there. So in this case, this is our internal possible BOS. IPBOS. So after that, because the market is at our extreme zone and it has been already mitigated, so as a trader, what should you do again? You need to do what? You need to identify the internal structure that was coming to do what? To mitigate this extreme point of interest. So even if you try to move to a lower time frame again to look for the structure shift, in this case, this was our structure internally, that so this was our last break of structure. So this was our protected high and this was our weak low. Instead, the market did not form other lower high. Instead, it break this high to signify or to give us what? To give us this change of character. You can see. So after the change of character, we will be able to understand that the 4-hour structure is now trying to realign with the higher time frame. So in this case, I'll name this one as internal of the internal, but to avoid confusion, let me call it I choke. Okay, internal choke. So having that, the structure is very simple. So having this change of character, what are we expecting? We have another range. It's very simple. We have this low and this high. So since the market moves in two phases, we have the impasse, retracement, then the continuation like this. So our structure will be forming like this, according if the market can obey our analysis. And remember, this aim will to take out this internal BOS here. Then after that, we have what? We have a possible external break of structure. So this is the whole structure, how it's look. Our main goal or our long-term target is to take out this one, but now we will cross the bridge. When we reach there, we need to work with what? We need to work with this internal break of structure. So after this stage of character, what the market did, the market retraced back. In this case, the market came all along to this point of interest there. And you can see the market tried to liquidate this order block. Okay, so having that, we had that first order block, which is our decision order block, and now we will have what? Our extreme order block below this zone. So in this case, when the market has mitigated here, you can enter aggressively, or again you can move to a lower time frame. In this case, you can move to the 15-minute, or if the stop loss is not that high, you can decide to do what? You can decide to enter aggressively. You can see even the 15-minute has already given us the choke here. This is the choke. So we are expecting a retracement and then a continuation all along until it should take out this high. Then after that high, again we expect a pullback, then a continuation. So that is how you do your market structure in combination with the smart money concept. It is very easy, very easy. You just need to master one concept, which is if you are trading ICT, you just master it. If you are trading SMC in combination with the market structure, that is all what you need. You don't need to confuse yourself. Okay, just know what the market is doing. Identify the internal structure and the external structure. Identify your order block or your point of interest. Identify the zones of liquidity, then you be patient with your setup. So that is all what I have for that volatility. So even it's not only the forex or the currency pair that you can trade using the SMC, no, even the volatility for the DERIV, the synthetic indices, you can use the same because they are using the same algorithm. Okay, they are imitating what the forex industry does. So even in this one, you can also try to do what, to use market structure or any other concept apart from SMC, and you will have to get the result, because the DERIV is trying to imitate the is always the chart always try to imitate what the the forex industry. So that is all for today, guys. Thank you for listening, and if you want to learn about market structure, take my numbers there on bio. You can just text me WhatsApp. Adios.